In today's video, we're going to be talking about multi-million-dollar Roth IRA conversions, what you should look for, what are the key characteristics that should enable you to move forward with a Roth conversion, and specifically how you can adopt some of the supercharged Roth conversion tools to save not tens of thousands of dollars, not hundreds of thousands of dollars. We're talking about millions of dollars is the difference if you have a good plan in place, a good Roth IRA tax conversion plan, and that's what we'll cover here. So the case study for this video is from a retired couple out of New York, out of Long Island, New York. The husband is 69. He's got a great pension of $90,000 a year. The wife is 62. She's still working for a few more years, but when Social Security is fully payable, they'll be getting about $80,000 a year from Social Security, again, plus this nice $90,000 a year pension. So when we're looking at the logistics of if a supercharged Roth IRA conversion would be beneficial or not, you've got to understand the tools that you're working with. In their case, they have $1.7 million of monies in tax deferred accounts. The majority of that is in a 457 plan in the name of the husband. And the wife has a couple $100,000 in her name as well. But they've got $1.1 million of monies outside of these tax deferred accounts, albeit already in Roth IRA accounts or non-qualified brokerage accounts, regular investment accounts. And these are the funds that they can use to pay taxes on the Roth conversion. So the logical question is, how can I do a Roth conversion and pay the least amount of money in taxes possible, right? Legally. So when we look at the consequences for this couple of not doing a Roth conversion, they're going to end up paying $3.5 million of monies in lifetime taxes if they don't do a Roth conversion, just by virtue of paying their required minimum distributions, the taxes on that, and their higher Social Security taxes all throughout their working life, not to mention their huge Medicare premiums. If they do a normal lump sum Roth conversion and just pull the Band-Aid off, right, and recognize $1.2 million of income this year, they're looking at an $800,000 tax hit. Now again, they only have about $1.1 million of monies in non-IRA funds, so that would take 70 to 80% of their reserve account to go out and do that. If they fill up the 24% tax bracket, which is what most financial advisors and accountants will recommend that someone do, it'll take them 22 years to do that, right? So our purpose and our methodology is we're not investment advisors. So we're not here to tell you how to manage your money and what to go out and buy and invest in. The fact that you're watching this video means that you're a thinker, you're a do-it-yourselfer. You love questioning and finding out additional insights on how to solve problems. So the supercharged Roth IRA conversion, we work with, and we have a network of multiple CPAs and tax attorneys. There's 12 main supercharged tools that we use that we can pick from when we run through these different cases. These cases, the supercharged deductions that you're seeing, where someone can pay $78,000 in taxes on a $1.7 million Roth conversion versus $800,000 in taxes. I mean, how is that possible? It's possible by getting good advice from someone who's done it before and they know that the process works. So let me go into details about this particular couple, and you can see more on how it might relate with you. Now we had one more slide. Obviously, the question is not if you should do a Roth conversion, but what are the consequences if you don't do a Roth conversion? In this situation, again, this couple, their lifetime tax liability, $3.5 million, and it's an ending net worth of $20 million if they do or they don't. So my take is you really can't afford not to do a Roth conversion. We're at relatively low tax rates historically in our country's history. The deficit is over $2 trillion, so the laws are going to change. They're going to come after your IRA accounts. So it's better to be proactive, take advantage of the tools while they're here, while you still can. If you'd like to get more information, again, like and subscribe. Click on the link below to get on my calendar, and you can set up a time to have a 15-minute overview call to find out more about your situation to see if we'll be a good fit. So when someone calls in and they want to see if the supercharged Roth conversion process will work for them, the first thing that we do is we set them up with a username and a password where they can log into our tax planning whiteboard. This is the software that we use to run through the numbers to show them what's possible and how they can manage their assets more efficiently and more effectively in retirement. So the first place we'll go to is this dashboard, and we'll kind of outline, again, the monies that they have to work with. $1.7 million of tax deferred monies, $280,000 of monies that they've already paid taxes on. Our purpose is digging deeper into the balance sheet, as you can see here, to find out what the benefit would be, and do you have the resources available to you to go out and engage in the supercharged Roth conversion process. Again, they have more than $1 million of non-IRA funds. They're able to go through and do that. So the conversation really turns into a benefit or a tax conversation about the tax implications of not doing a Roth IRA conversion and what that looks like from a retirement planning perspective. So let me show you, in other videos I've gone through and kind of shared before and after scenarios of the tax benefits with these graphs. I like this one, which is the net worth ending differential. Again, we're talking about a $22 million ending net worth differential. But let me illustrate it for you in this breakdown chart, okay? So here we are in 2024. Husband is 69. He's going to be turning 71st. And that's when the majority of the Social Security benefits will kick in. So notice here on the left-hand side, we've got in green the income. So $115,000 of income, that's combined of his wife's salary and the pension for $93,000 a year. Here in yellow, they don't have any of the required minimum distributions yet, spending a little over $100,000 a year. So let's move down the line. 2025, so far so good. 2026, so far so good. 2027, boom. Social Security is in at $78,000 a year, so their income is a lot higher. Notice their tax payments, $36,000 a year. This is their federal and state taxes. Again, they're living in a nice low tax state in New York. This is what I want you to focus on. The tax differential between 2027 and 2028. 2027, they haven't taken any required minimum distributions yet. Tax payment $36,000 a year. 2028, boom, that distribution is $80,000. Again, the $1.7 million of monies that they have in their tax deferred accounts, that's continued to grow. That first required minimum distribution kicks in, it doubles their tax payment from $66,000 a year, from $36,000 a year to $66,000 a year. And I'll show clients this, and you'll have access to this where you can play around with your numbers, with the numbers yourself. You just kind of see that we're talking about real figures here, right? And the payments become quite alarming. Notice that by age 79, their tax payment, $96,000 a year, it's more than the sum total of their Social Security benefits. So in essence, 100% of their Social Security benefits are going in towards their tax payment. My take is there's a better way to do this, right? A much more efficient way to go out and do this. And that's what we're going to cover with the supercharged Roth IRA conversion process. Let's look in at the typical benefits of a Roth 101 type of Roth conversion scenario. Okay, this is a good one. This is on our tax planning tab. Roth Conversion Planning 101 says, why don't we just fill up the marginal tax bracket? How long is that going to take, and what's the benefit of doing that? So we can look at filling up the 24% marginal tax bracket, and you can see here these red and orange lines. These are we've got the Medicare premium taxes there. I want to go to ordinary income tax brackets. So we've got the ordinary income tax brackets here. In green is the impact of filling up the 24% tax bracket. So if we do that, it will give these clients $12 million of additional ending net worth over their lifetime. The problem is it's just going to take forever to do it. We can go in and look at the withdrawal and the conversion amounts starting in 2024. If they're filling up that bracket, This is something we can print off and you can give to your CPA to tell them exactly how much money you want to Roth convert over each year. But it's going to take them, 10, 12 years filling up longer than that. It's going to take over 20 years. Almost about 25 years before they can go through and finish up with that Roth conversion on filling up the 24% tax bracket. If we move it up to the 35% tax bracket, let's see if that one's the way to go. 35% tax bracket gives them $16 million of savings. The 32% tax bracket is $17 million. So under a normal conversion amount, that would be the way to go. Again, the hesitancy of the clients of why they're hesitant about doing that is we can run through and look at the tax details of what this is. As they're Roth converting over, this is a withdrawal amount. Filling up the 35% tax bracket, $375,000 the first year, $341,000 the second year, $318,000 the third year. This is the amount of the conversion that they're doing. The tax implications of that, again, total federal taxes paid $114,000, $117,000, $140,000. So this is where that $800,000 tax problem comes into play, and there's just a better way to do it: the Supercharged Roth IRA conversion process. Here's our mock 1040 form. Again, we're looking here at 2027. This is their current plan, $78,000 of Social Security benefits. They're not taking any required minimum distributions yet. Taxes at $35,000. Fast forward one more year, boom, required minimum distribution activated. $80,000 of additional income coming into play, doubles their tax liability. This just shows the federal taxes at $60,000 a year. So now if we do the supercharged plan, the proposed plan, let's go back to 2024. What are we doing here? We're looking at a $1.8 million, let me bring in a graph that I've already highlighted on the supercharged plan. We're looking at a $1.8 million lump sum Roth IRA conversion. In green is where the secret sauce comes into play, right? We've got adjustments to income of $1.2 million. We've got some itemized deductions coming in at $400,000. So the taxable income, $380,000. Notice how the taxable income, we're purposely keeping that below $400,000. And the total tax on the Roth conversion, $76,000. So again, if this guide on how you can do a proactive Roth conversion is beneficial, click on the link below, get on my calendar, and a team member will reach out to you. We'll activate this software for you. We'll spend some time to run through the numbers for you individually to see what your tax savings could be. And that's our premise here on how we can help individuals. Again, these laws and these tax regulations, they're not new. This isn't something that we invented. This stuff has been around since 2010, since the income restrictions came off of the ability for someone to do a backdoor Roth IRA conversion. And this is my fear, that the laws will change, that you won't be able to do this in the future. It is kind of extraordinary, though, to say that we can take someone who is doing a $2 million conversion, a $3 million conversion, a $5 million conversion, incorporate these tools, they're scalable, and then to still keep them in a 10% tax bracket. Again, click on the link below, like and subscribe. Thanks for watching.